Roger, can we go?
You let us know.
Yes or no?
And then just let me know, then I'll introduce Dr. Rajadhyaksha.
Okay. Okay. Hi.
Yes, yeah, you're live. You can go ahead. Thank you.
Okay.
Hi, everybody. Good evening. Thank you for joining for this ebaithak with Dr. Niranjan on India's experiment with central planning. Before Yazid introduces Dr. Niranjan, just some rules for everybody. I request you to keep your cameras and mic off at all times. And if you have any questions during the discussion, we will share a link with you on the chat box. Please put all your questions there. And we'll have the Q&A session by the end of the session towards for 10 minutes or so. Yazid, over to you. You can introduce Dr. Niranjan.
Thank you so much, Asta. It is my pleasure and honor to introduce Dr. Niranjan Rajadhyaksha. He is, of course, a member of the Board of Trustees of the Center for Civil Society. He is the Research Director and Senior Fellow at IDFC Institute, and his research interests include macroeconomics, political economy, and economic history. He was previously Executive Editor at Mint, the financial daily, and he continues to write the award-winning Cafe Economics column. If you haven't read it, you must make it a point to read it every week. Niranjan was awarded the Jefferson Fellowship by the East-West Center in Hawaii in 1998, and the Society of Publishers in Asia Awards for Excellence in Opinion Writing for 2 years in a row in 2010 and 2011. He won the prestigious Ramnath Goenka Award for Excellence in Journalism in 2012 and the B.R. Shenoy Award for Economics in 2017. He is also a member of the Academic Advisory Board of the Meghnad Desai Academy of Economics and was a member of the Advisory Committee on the 5th volume of the Official History of the Reserve Bank of India, written by Tirthankar Roy. Without much ado, I'd like to welcome Dr. Rajadhyaksha. Over to you.
So thank you, Yazad, for this invitation. Thank you, CCS. CCS is like home to me. I've been an old friend of Parth and the others much before I actually joined on the board as a trustee. So thanks once again. It's a pleasure to do this. The topic which Yazad suggested for today was India's experiment with central planning. And I just want to make one clarificatory statement before I start, that India's tryst with planning was broadly between 1951 and 1991. After 1991, the Planning Commission did survive for a couple of more decades, but the Planning Commission was no longer the primary investment vehicle in the country. It was largely an expenditure body. So these 40 years was a long experiment, and we know how it went, but I'm also going to focus on some of the positives, actually. So every plan, in these 40 years, there have been many nuances and changes, and every plan has its own flavor. I'll try to explain that in my talk. But I'm going to today focus largely on the big debates of the 1950s, which were the turning point in Indian economic policy. So most of my talk will be about the debates about Nehruvian planning, because they set the tone for economic policy for the decades which followed. So with that, let me just start to the main talk. So I'm going to cover 4 broad areas. The way this talk is structured is as follows. First, I'll give you some background to the debates within India before planning was accepted. And the reason I'm going to do that is to give an idea that planning, or especially in the 50s, didn't come out of the blue. The planning idea was embedded in Indian nationalist politics and policy discussions for many decades before that. So in a way, what began in the 1950s has its roots much earlier. The second, as I said, is I'm going to focus on Nehruvian planning, but I will touch upon subsequent plans as well at the end. Then the third thing I'm going to do is that I'm going to cover 3 important critics of the Nehruvian plans. 2 are outsiders and 1 was an insider. And the third and the fourth part, obviously, is to take a broad look at the successes and the failures. the very fact that I've defined it that successes and failures means that there have been some successes, but it's my view that the failures overwhelm the successes. So let me start with the opening part, or the first, milestone, and which is the backdrop of the planning idea in India. As I said, Nehruvian planning or planning India embraced in the 1950s is not something which came out of the blue. So the Congress party was set up in 1885, right? The first session of the Congress took place at that year in Mumbai, or what was then Bombay. And at that point of time, obviously, the initial demands of the Congress party were political, for greater representation, entry into the ICS, etc. But within 2 or 3 years, economic issues also began to come into the overall resolutions of the Congress party. At that point of time, there were 2 or 3 things which sort of were in the air. The first is that there was a very strong feeling that the British had impoverished India. So most famously, Dadabhai Naoroji's drain theory, which said that every year there's a drain of capital from India to Britain because of the colonial policy. And that has been impoverishing India. The second is that they saw around them countries which had begun industrialization late, but which were catching up with North Europe. So the first industrialization in the world happened in England, in Belgium, in these parts of Europe. But after 1850, countries like Germany, Russia, Japan had begun to catch up. So the nationalists were aware of these things. And one of the things they noticed is that the state had played a big role in the strategies of these countries. So there was a sense right early on that India cannot follow a laissez-faire policy, that the state has to play some role. Now, what that role is, that idea kept evolving, as I'll try to explain. So there's this famous Russian, actually an economic historian of Russian origin called Alexander Gershon-Kron, who wrote a very famous book on economic history in the 1960s. So basically, he showed, that how some state intervention was necessary for countries entering the development and industrialization game a little late in the day. And that's the second thing. And the third thing, the nationalists saw that despite the drain, and as they were looking abroad at the successes of other countries, India itself had a mini industrial boom after the American Civil War of the 1860s. So there was growth of industry, especially the textile industry, but also sugar and a few other industries in the presidency towns and some of the areas of British India. So there was a sense that there is something happening. How do we build on it? Now, as I said, there was a strong sense that the state had to play some part, but it was not clear what that role should be. So I'll just give you an example. In the 1880s, 1890s, there was a gentleman called G.V. Joshi in Pune, who was one of, I think perhaps India's first economist, you could call him, or one of India's first economists. And he argued in an essay that the state, he looked at Japan and Germany, and he said that the state should, give guarantees to Indian enterprises who are trying to raise money in the London market, that the state should subsidize native enterprises. He underlined the fact that we should not have tariffs, but the state should still promote. But there was also a growing call for some form of protection. And, of Imperial Legislative Council in Delhi in 1911, where Madan Mohan Malaviya introduced a bill to increase import taxes on sugar to protect the local sugar industry. And Gopal Krishna Gokhale and all supported it, saying that India needs some form of protection. And actually, this is something which, the CCS network, perhaps, there are people in there who know more than me about this, that the one area where Indian liberals, or two areas where Indian liberals diverged from, say, the British liberals, was on free trade and property. There was a sense that zamindari had to be abolished. And there was a sense that there was some form of protection is needed. And this was broadly, you can see it in a lot of Indian liberal thought in the 19th century and the early 20th century. So this, this growing clamor for protection came to a head in 1918, where the British government had set up an industrial commission to look at how India can progress, progress through industrialization. And the reason the British set up this industrial commission was twofold. One was there was a growing clamor, so they had to satisfy nationalist demands. But also during the First World War, they realized that their sort of jewel of their empire was strategically weak, that it didn't have enough industry and it was exposed. If you had block trade, India, you would lose India. So therefore, there was something that India should be more developed than it is now. So the Industrial Commission report is quite a sort of damn squib. There's nothing much in it, frankly, other than the usual, sort of government, stuff. But the most interesting part of the Indian Industrial Commission report is a long dissent note, again by Manmohan Singh, where he makes a very strong case for protective tariffs. And he says, look at Germany, look at Japan, look at Russia, look at all these countries, Russia as in pre-communist Russia. And there's a case that the government should protect Indian industry through tariffs, at least till Indian industry grew. So eventually this came to 1921, where a fiscal commission actually, for the first time, there was a process of raising tariffs for certain industries. Temporarily, they said, but it was a big, big move away from laissez-faire for India. Now this, if you see, the first talk about what the state should do was focused largely on subsidies and then a bit on on tariffs, on import tariffs. There was still no planning discussion on the horizon. That actually began in the 1930s. And we had a range of, again, they were looking abroad, right? So, of course, the Soviet Union was a big influence, but even milder forms of planning like the New Deal in US, which the Roosevelt administration had introduced, people were seeing that. So through the 30s and 40s, there were a range of plans which were, published. The first, obviously, was by M. Visvesvaraya, who was then the Diwan of Mysore. And Visvesvaraya basically said that we have to double industrial production in 10 years. And for that, we have to raise our investment rate. We have to push, pull people out of agriculture, etc. Then you had the famous National Planning Committee, which Subhash Chandra Bose set up in 1938, led by Jawaharlal Nehru, which again made the case that India is a poor country, we have to accelerate our development, and the only way to do it is through national planning. Curiously, the Bombay industry also came into the act, so the famous Bombay plan, which again, if you read the Bombay plan, it's quite amazing that here's a group of industrialists who are actually saying that the state should play a more active role in directing resources and raising resources. But I also want to mention one thing, that in 1931 at the Karachi Congress, the Congress agreed on a set of resolutions on fundamental rights. And among those resolutions, there was one resolution which called for protection of Indian industry, and the second which said that the state shall own key industries in the country. So again, we see that, what happened after 1950, we are seeing all those intellectual influences come into play, that pressure build up. So again, as I said, my point was to establish that when Nehru began the Nehru government set India on the road to national planning, there was at least 50, 70 years of more or less consensus in the Indian political sphere that the state has to play some role. In the early days, people thought it should be through some form of subsidy or credit or industrial training. Then the Manmohan Singh type argument that you need protective tariffs. Then the Congress says that you have to, government has to own key industries. And then, of course, these plans where, you're actually planning for how to transform India. So this actually, so by 1947, the die was cast. It's very difficult to argue. A lot of people say that if Nehru had not been prime minister, somebody, we would not have done this. My argument is that no, maybe the details of Indian planning would have changed, but I think there's a very, very strong possibility that whoever would have led the Indian government in the 50s would have gone for some sort of planning. The only two or three people who were skeptical were, of course, Gandhi, and there was a Gandhian plan, but Gandhi was not just skeptical of planning, he was skeptical of industrialization, he was skeptical of the entire paraphernalia of a modern economy. Patel was more towards sort of planning with a capitalist led by, where capitalists would have more freedom. So again, it would have been a less restrictive planning. And there were some economists, you may not even remember them today. There was a famous economist called Gyanchand of that time who flagged off this idea that, planning may work economically, but it will set India down the road to totalitarianism. So this is partly like a Hayekian argument that is the road to serfdom. But these were all said and done feeble voices. If you read Ambedkar of that time, Savarkar, Subhash Chandra Bose, broad consensus that planning process or the state should play some leading role in India's economic transformation. So there were two important, so now we come to the actual planning process, right? And there were two important things to remember about planning. Why planning? So the first was that there were two large goals. That one is that we have to accelerate the rate of growth of the Indian economy. About 40, 50 years, the first half of the 20th century, the Indian economy had more or less stagnated. Of course, most of the world was also under depression and, it was tough times across the world. But as far as Indian nationalists were concerned, they saw that 50 years there was hardly any income growth. So there was this, very, very strong view that India should grow much more rapidly. And I just want to, mention the industrial policy of 1948, which is the first policy on how India should be industrializing. And I want to read something from it. So the industrial policy of 1948 says, any improvement in the economic conditions of the country postulates an increase in national wealth. And then it goes on to say, a mere redistribution of existing wealth would make no essential difference to the people and would merely mean the redistribution of poverty. So I think it's interesting that, today, people sort of this distribution and growth debate is an eternal debate in economic policy. But in 1948, very early on, the government led by Nehru in its first industrial policy says that, listen, distribution is not going to get us anywhere. With our mass poverty, we need growth. So that's the first goal which they set out, that how do we raise the growth rate of the economy so that people get more economic opportunity. But it was not only that. The second was they wanted what was then fashionably called the structural transformation of the Indian economy. So India was an agrarian economy with a smattering of industry like, say, textiles. Of course, there were some industries in the Second World War period like shipbuilding, which had emerged, but largely it was, consumer goods and textiles, which was Indian industry. And basically, the goal was that how can we transfer the structure of this economy, completely transform it? So how do we pull people out of agriculture? How do we build a diversified industrial base? So not just to be dependent on one or two industries. There was another reason for this, obviously general transformation or this economic diversification was important to them. But these were the Cold War years, and I think the Indian leadership saw that if India had to maintain strategic autonomy in this difficult world, it needed industrial depth. So it can't just be a producer of textiles. It needed to produce machines. It needed to produce steel. So therefore, that was the second geopolitical push for structural transformation. So in 1950, we enter with this idea that to solve our economic problem, it can't be redistribution, it has to be growth. But just growth based on the existing pattern of production is not going to do the job. We have to also structurally transform our economy. So those were the broad sort of, assumptions or the broad views when India stepped into the planning era. Now, I just want to, give you a sense of what development economics of that time was talking about. Because again, as I said, the Indian leadership was pretty. So the basic idea was this, that we have to, India, a large part of the population is stuck in agriculture and people have to move out. There is what is called disguised unemployment in agriculture. There are millions of people who are on farms who have zero marginal productivity. If you pull them out of the farms, nothing will happen to agriculture production. Actually, it will go up. So question of like too many cooks spoiling the broth sort of idea. But the question is, go where if you take them out of agriculture? So the idea is fine. We'll take them into industry. So industry has to grow to pull people out of agriculture. And for industry to grow, you need capital, right? You need physical capital like machines, and you need financial capital, savings. But you don't have the savings rate, right? So how do you raise those savings? Means where do you get the money to actually industrialize rapidly? And who will, who will push for this? Will it be the public sector? Will it be the private sector? So these are all the debates which were happening when Indian planning begins in 1951. So the first plan of 1951, if you read it closely, is not much of a plan actually. It's largely a document talking about how India needs to grow and basically post-partition, post-colonialism, how you have to sort of, resurrect the economy. It's not that it was a completely useless document. It did have some insights about the road ahead, but it didn't have a very good theoretical framework. It had, in economics, what we call the Harrod-Domar model, right? So basically saying that if you can raise your saving and investment rate at a certain amount with a certain capital output ratio, this is the growth you can aspire to. Actually, the breakaway plan was the 1956 plan. I think everybody knows this. So what is the 1956 plan? Because this is what I really want to focus on. That obviously it was a very ambitious plan to ramp up industrial investment and therefore the growth of the economy. But it was not only that. It had a very specific idea about where that investment should go. And it was in capital goods. So capital goods are, so if you think of, capital goods and intermediate goods and consumer goods. So capital goods are machines which make machines. Intermediate goods are inputs like steel or aluminum, etc. And there are consumer goods which you and I consume. So now ideally, a country which is, aspiring to grow or aspiring for a higher standard of living, you obviously, one way to measure it is the amount of consumer goods you can buy. But basically what the second plan said is just wait, let's not do that now. Let's basically first build the machines, which will build the machines, which will build the consumer goods. So it was sort of, we'll pause on the consumer goods and push for more capital intensity of Indian industry. And as I said, that there is definitely a sense that there were some geopolitical considerations here as well. India didn't want to be dependent on these key things to either of the blocks. So how do you do this? So one is that there are 3 or 4 big problems now which come about. One is you're saying you want to increase the investment rate, but you don't have adequate domestic savings. So then how do you, that gap, this is called the savings constraint. How do you close that gap? How do you ensure that you can actually support the, come up with 2 or 3 ideas? The first idea is that we will deficit finance, right? So we will basically raise money from the Reserve Bank of India. Reserve Bank of India will print money. The second idea is we'll borrow abroad. So you have all these Aid India consortiums, etc. And we know from history that the Soviets helped build some steel plant, the French, the Americans. So we'll basically borrow abroad. The third idea is, and this is really surprising, is that the plans will be self-financing at some level, because the companies we set up under the public sector will at some point of time become profitable. And those profits will be plowed back into further investment. This is, looking back, complete naivety, because the public sector ended up as a big, if you read the documents of that era, including a speech by Mahalanobis, which I happen to have read, which says that the PSUs will be profitable by 1970. So after 1970, we can cut back on deficit financing and borrowing. If you want to build or sort of divert all your resources to investment, then you have to suppress consumption, right? So the only way to suppress consumption is heavy taxation. So heavy taxation was sort of baked into the plan, because you have to cap people's spending, because otherwise you don't have the consumer goods to meet that demand. So you basically ensure that you cap spending, you tax heavily, take that tax and again divert it into your planning process. The only interesting thing in all this is that India remained a relatively open economy in the 1950s. So this entire, this import licensing became really a burden after, 1960s. And I think Bhagwati and Panagari also have pointed this out. Also, as I said, you find sometimes strange things happening. Like, you don't expect at first glance that a country which is planning so much would allow, tariffs to be relatively low, given what happened later. The second is this entire thing that, the PSUs will become profitable. So much so that in the 1957, the Congress party passes a resolution which says that why don't we list the PSUs in the stock market? Now, this is the Congress party of the 1950s, right? That, we've built these enterprises, they're going to be profitable, let the Indian people share part of the profits. Now, today it looks absolutely bizarre, but it happened. Again, just to talk about PSUs, in 1950s, there was this debate in Parliament where Atal Bihari Vajpayee asked Nehru that, I can understand everything else, but why are you building hotels? I think that time the Ashoka Hotel was being built in Delhi. And Nehru said that, see, this is an easy business. Government can make profits out of it. Why should these easy profit-making businesses go to the private sector? So later, the government can't even make money in hotels. But anyway, the point I'm trying to make is that there was this multi-pronged approach to increasing the investment rate, which included deficit financing, which included profits of the PSUs, which included borrowing abroad, and which included heavy taxation of the people. So what this meant was, by definition, the rest of the economy was suppressed. Private enterprise was suppressed. Private consumers were suppressed. Agriculture was another part which we can come to later. So this was the era where the state just expanded in capacity, and most of the investment, most of the resources of the country were taken up by the state. Now the question is, what about agriculture? So in that, if you read again the second plan, agriculture is seen as what is called a bargain sector of the economy. But they said that we don't need to actually invest much in agriculture to increase crop yields. What you have to do is you have to make institutional reform. So you have to have extension services where people from, government who are trained agronomists teach farmers how to. This is the same idea that the government can tell farmers how to run their farms. So we will, they will train farmers on how to, accept modern practices. We will get, give them some marketing support. The most important institutional innovation that came up, obviously, was cooperative farming, which led to the big backlash led by people like Charan Singh in Uttar Pradesh and N.G. Ranga, which sort of became the push towards the formation of the Swatantra Party in 1959. But agriculture was supposed to be a pure problem in the sense that it is where people are there with low productivity. You have to pull them out. There's a certain amount of money we have to put into agriculture, but very minimal. Most of it can be done through institutional reforms. So this was the crux of the Indian planning framework that, in Marxism, there is what is called Department 1 and Department 2. It's a schema of reproduction in the third volume of Capital. And Malnobis and Feldman, actually, that's the model which they built on. But there was very little investment in consumer goods, very little investment in job creation or in agricultural development. So the whole bet was that the Indian state would, in 10 or 15 years, transform India. That by 1970 was the sort of thing they're talking about. And by 1970, we'll have built enough industrial capacity, we'll have enough profitable PSUs, we'll be on our own, we'll have that certain momentum going. Now it's obviously, I'll come to the record later, but it's not hard to guess that nothing, some of this didn't happen. But as I said, there have been some positives which I can come to later. Now, this is where, most, as I said, the consensus was this, means there are very, very few people, a lot of foreign people came in. I think Milton Friedman was one of the few who warned that, be careful, this is not going to work for you. Most people sort of thought that India was going to be a, something to show the rest of the world of how a third world country can develop with democracy. Like, at that time, the big comparison with India and China. But there was 2 or 3 important voices of dissent on this. So the first, obviously, was B.R. Shenoy, and I think in CCS, most people know about it. But I think I should talk a bit about what precisely did Shenoy say, because I think it's vaguely known that Shenoy was was critical of the second plan. So what Shenoy's dissent note to the, that memorandum of economists who wrote a note for the Planning Commission, the famous dissent note actually makes 2 very significant points. First, Shenoy says is that the plan is just too big. It is too ambitious. India does not have the resources to support such a plan. And I'll just quote something, a line from that dissent note, which I often use. Shenoy says in 1955, to force a pace of development in excess of the available real resources must necessarily involve uncontrolled inflation. So he says, if you basically push your economy beyond its capacity, you're going to end up with inflation. He also anticipated balance of payments pressures as well. So that's the first point, And actually, Shenoy was right on both, because 56 to 61 was, by the standards of those times, a period of high inflation. And also, that domestic savings would run out, and therefore, if your foreign borrowings are not enough to cover the investment savings gap, then you have a balance of payments problem. And 1 year into the plan, 57, India hit its first balance of payments problem in its history after independence. So Shenoy was bang on target. So he basically said that the plan is too ambitious. Just be more careful about it. And later, it's a less well-known episode, but in 1972 or 1973, B.S. Minhas, who's like towering economist who has published papers with Kenneth Arrow and Robert Solow, and Minhas resigned from the Planning Commission, saying that this plan is just unrealistic. It's like a political statement. It has no basis in economics, and you're going to run into trouble. But the Minhas episode is less well known. Shenoy is much more better known. But the same concern that the plan cannot be bigger than your real resources in the economy. The second thing which Shenoy said, besides the size of the plan, was that there will be institutional consequences. And this is again going back to what I mentioned about Gyanchan, he said that your democracy will be at risk. If you put everything in the control of bureaucrats or the political class, then you are putting risks, the risks of democracy, for democracy. So obviously, Shenoy was a student of Hayek, and in a way, this not just Gyanchan, but this reflects Hayek's entire point about the road to serfdom. I think road to serfdom was a little over the top, but the basic concern is not trivial, right? So Shenoy makes these 2 points in his critique of the plan, which is that the plan is too big, and the second is that it's a risk to your democracy. Now, the interesting thing, if you notice, is that the entire thing, Shenoy does not say that India should not be planning. I'm absolutely struck by that. So this is a interesting. They sort of never completely gave. They never said that India should not plan at all. I think even Masani was taken, he had a book on democratic planning. They were taken in by this idea that in countries like France, for example, where there's broad indicative planning, in Germany, so that India can do that. I think what their concern was about the very detailed nature of the planning process. And, again, these are the paradoxes of life, of history that we sometimes ignore when we look at these grand sweeping narratives. That when the Swatantra Party was formed, right, the 21 principles of the Swatantra Party, which are the sort of ideological core of the Swatantra Party. So I'll just read out something. I've got it here on my computer. The 10th of those 21 principles. And the 10th, the one part says the party, which is Swatantra Party, believes in the incentives for higher production and expansion inherent in competitive enterprise, with adequate safeguards for the protection of labor and against unreasonable profits, prices, and dividends. Now, this is a very strange thing, that they're actually saying that, we believe in competition, but they should safeguards for labor, I can understand, but against unreasonable profits, prices, and dividends. And then the party, it says that the party stands for the restriction of state enterprise to heavy industries, such as are necessary to supplement private enterprise in that field, including national services such as railways, and the starting of new enterprises which are difficult for private initiative. So here is the Swatantra Party saying that we are uncomfortable with something called unreasonable profits or prices, and that the state should actually, own the railways. The state should build heavy industry, and wherever private capital can't come up, the state has a role to play. Now, this is not something many people sort of point out. Of course, Shenoy changed his views later also, but I think it's always interesting that the historical record is always more complex. So just as I said, the idea that the Congress Party wanted listing of PSU shares in the stock market in by 1957 or 58, and that the Swatantra Party says that the state should own some types of industries is always this sort of quirky facts that should make you modest about, talking about the past, about, falling prey to grand narratives. And so that is Shenoy. The second big critique came from Vakil and Brahmanand, who were basically in Bombay. And if Shenoy had questioned the size of the plan, Vakil and Brahmanand questioned the nature of the plan. So they didn't say that the plan is too big. They said that we should not be investing in capital goods. We should be investing in wage goods. By wage goods, they basically meant the food sector and textiles and some very basic consumer goods. Now, what was their logic? So their logic was that, we have millions of disguised unemployed people in the agriculture. And these millions of disguised unemployed people are actually a form of frozen savings, in the sense that if you move them out and get them some other, jobs, you are funding the creation of capital assets. So therefore they are like savings, right? Without having any loss of output in agriculture. So they saw this disguised unemployed people as India's main opportunity to increase its savings rate and grow. But they said that these people should go into, if you want to pull enough people out, they have to go into very light industries where capital per worker is very low. It can't be these steel factories, etc., which don't employ too many people. And the wage codes also will satisfy the demand of people for a better life. So this was the Vakil Brahmanand model in brief. They were also for the mixed economy, but they saw a greater role in the private sector, etc. They said that the infrastructure should come from the state, but the plan should not focus so much on heavy industry. And the third big critique came from within, which was Manmohan Singh. So Manmohan Singh's, as I said in 57, after Shenoy's critique, India already ran into a balance of payments crisis. So what the planners began thinking about Indian planning, that India's growth is being held back by a savings constraint, because there's not enough domestic savings to fund investment. After the second 5-year plan ran into trouble, the planners started saying, added another constraint to their sort of framework, which is the foreign exchange constraint. But India doesn't have ample foreign exchange. And in fact, later in the 60s, after the droughts of the mid-60s, a wage goods constraint was also introduced, something like the Brahmanand Vakil critique had anticipated. But this foreign exchange constraint was really a big, big issue. And Manmohan Singh in his PhD thesis argued that India should be more export-oriented. It's interesting that in the 50s, India, one of the big miscalculations of the planners was not just about this role of public sector and the focus on heavy industry, which people often talk about, but one of the big miscalculations was export pessimism. It was believed that global trade is going to stagnate. They were still, 30s, 40s, what happened? They completely misread the situation. So therefore, India missed this massive boom in international trade after 1955. And as we know, countries like Korea and Taiwan and Singapore sort of latched onto it. So this export pessimism, Manmohan Singh basically argued in his thesis that you cannot grow fast unless you import capital goods and machinery and everything. But your borrowings or your foreign aid is not going to pay the bill. You have to export. And it's interesting that the third plan, which is after the second plan ran into trouble, it was cut back. The third plan was the first plan which actually talks about export promotion. For the first time, you see Indian policymakers thinking about export promotion as an important part of the development strategy. However, this was completely wrecked, because after the crisis of 1957, there's always a choice, right? That suppose you have a balance of payments crisis, what do? You either do something to push your export earnings or you do something to restrict your import spending. Now, if you believe that there is no scope for exports, then you want to control imports. So then you start building this entire web of import controls, which completely suffocates the economy. So it is my assessment actually that the biggest flaw of Indian economic policy was not so much the, sort of focus on capital goods as much as the turning back on international trade, because India has been a trading country. But anyway, that's a different discussion. So by the third plan, India had already begun thinking about export. So these are the three big critiques, and Shenoy, Vakil Brahmanand, and Manmohan Singh. Now, as I said, Indian planning was not a static thing. I focused largely on the Nehruvian period because that was the sort of turning point which led us down the path which ended in 1991, where it was finally realized that this is not working, and by the time whole host of Asian countries had steamed ahead of India. So it is well known that in 64, South Korea and India had the same per capita income. But by 1990, South Korea was knocking on the doors of the OECD, and India was still a miserably poor country. But as I said, the planning was not a static. It's not that the second plan was all that was there. Every plan kept changing, from experience. Although the structure of controls remained. So in this, as I said, in the third plan, beyond the savings constraint, they noticed the foreign exchange constraint and tried to push for some sort of export growth. It never actually succeeded because India was always hobbled by balance of payments problems. But then what happened? We had the war with Pakistan, with China in 62, then Pakistan with 65. That really put immense pressure on government resources. Then there were two back-to-back droughts in 65 and 66. So there was already a sense that planning was not working. So if you read B.K. Nehru's book on his autobiography, so by the time Shastri became Prime Minister, Shastri had already seen these problems. And there is a sense that he wanted, he was not trying to dismantle planning like a 1991 movement, but he saw that so much centralized planning is not working, that India needs more consumer goods production, and also that the private sector and prices have to play a big role. Now, the interesting thing about the Indian plans are that there is very little role for prices. It's all physical planning, that so many tons of steel, so many things. So, in fact, Peter Bauer, very sarcastic tone called it priceless planning. So priceless, of course, means very valuable, or in economics means very absurd. So Shastri did try to do some initial reforms, and also in Mrs. Gandhi's early years after the devaluation of the rupee in 66, there was some attempts to reduce controls. But then, as we know, the leftward turn in 69. But that's another part. That's another part of history altogether. So after the droughts of 60s, the fourth plan started talking about the wage goods problem, and that how India needs to increase its production of food, of textiles, etc., because we're not managing to provide enough for the people. The fifth plan, actually, it's very interesting, because by the fifth plan, Mrs. Gandhi had come back with the idea that, her famous slogan is Garibi Hatao. And in those years of the 70s, there was this feeling that growth is not enough. So if you remember, I had mentioned the first industrial policy, which said that, India needs growth. India cannot redistribute its way out of poverty. But by the 70s, in this entire thing of Garibi Hatao, the plan started talking about anti-poverty, special anti-poverty programs. So it's not that growth will pull everybody out of poverty. We need a anti-poverty. So poverty eradication became the central part of the plan, rather than as in the old days, building more steel plants, etc. Then came the sixth plan. The sixth plan was largely also partly under Janata government. The sixth plan, it's very interesting. It's not realized very often. It actually abandoned the Mahalanobis strategy. The sixth plan does not talk about, capital goods or this sector, that sector. It basically says India has to grow rapidly, and it needs so many resources to grow rapidly. And by the 80s, that is the seventh plan, which again Manmohan Singh was, I think, the head of the Planning Commission, it is more or less clear that India has now got planning fatigue. So the seventh plan strangely does not talk about increasing industrial capacity. It does talk, but not at the same extent. It starts talking about India needs more infrastructure to help private enterprise grow. It says that India doesn't need more capital assets, it needs more productivity. So it's a gradual movement away from the old planning framework. So by the 70s, I think it had become clear that Indian planning was not delivering. And by the 80s, even the Planning Commission had started thinking in different ways about what is to be done. And then, of course, comes the big moment in 91. So the Planning Commission continued for another 20 years. But what 91 basically did is it removed all restrictions on private investment, right? So now the investment push so if you remember, the main thing of growth is that if you need more investment. Now the burden of investment has been shifted to the private sector. And then the Planning Commission is not now saying that, please invest in this, I will give you a license for that. Planning Commission is saying that, we will maintain the overall policy framework for the private industry to deliver. And then the Planning Commission gradually became more and more irrelevant, and it became more a spending agency. So it started giving more inputs about how the government should spend on programs, etc., not so much on investment. So this is the broad sweep of planning in India. And the question still arises, that, as I said, it's a much more nuanced story than most people believe. I just want to point 2 or 3 things. That one is that planning in India has a long history. Its roots lie in debates which start in the late 19th century. So that the state has to play a role in the economic development of a poor country is more or less, something which most Indian leaders accepted. And actually most third world leaders at that time, even someone like Lee Kuan Yew, began with this assumption. Then the second is that the planning process was not completely stupid. It was thought out, and it was perhaps over planning rather than planning, which was the problem. That there was too much belief in the wisdom of planners and less in the collective wisdom of the markets. And the third is that Indian planning was not set in stone. It kept adapting to the changing circumstances. But eventually its irrelevance was, it was impossible to deny. And as I said, in 91, it was finished. So now the question is that what are the successes and what are the failures? So I want to go back to the beginning of my talk when I said that in 1950, there were 2 big goals. One was increasing the rate of economic growth, and the second was structurally diversifying the Indian economy, giving it depth. So how did planning do? And I want to focus more on the Nehruvian era. So it's interesting that if you look at any long-term data on India's economic growth, you will see that from 1900 to 1950, there was more or less stagnation. And for a whole host of reasons, it's not just because we were under colonialism, it's also because the entire world economy was in all sorts of trouble. There were moments of booms, so during both the world wars, Indian industry had a fantastic time. In fact, a lot of old trading families moved into industrial capitalism around that time. 30s were a washout. So, but overall, it was not a great time for India. From 1950 to 1965, which is the Nehru era, so after 50 years of zero growth of 0.5% a year, GDP grows by 4% on average, which is a substantial break in the historical record. And that second break happens in 1980, but that's a separate issue again. So there's no doubt that the the economic growth did accelerate. There were 2 problems here. One is that obviously India's population also was growing. So per capita income growth was much more modest. But still, India grew at about 4%. Later, the real problem began after 65. 65 to 1980, India's per capita, India's GDP growth by about 3% a year, and population growth was about 2.5% a year. So basically, there was income stagnation. All said and done, in the Nehru years, we did see about 2% a year increase in per capita incomes. Now, this is as far as the growth given history goes. But that's just one way of looking at it. The equally important way to look at it is, how did India do against other countries? And China is a bad example here because China went through crazy times with the Great Leap Forward, cultural revolution. So I think India overall did decently well compared to China. In fact, in 1980, India and China had comparable per capita incomes. But we know that the entire East Asia just steamed ahead of India, and of course, Japan had its big recovery. So in 1945, if you were a betting man and you asked somebody that which is the one country in Asia which is likely to grow very rapidly now, it's high chances that people would have said India, because India had all said and done a high quality leadership. It was moving towards a democratic system. It had a long history of industry and enterprise. But Japan emerged from the war and again, took its place in the world. And then a lot of East Asian countries did. So compared to our own history, we did okay. Compared to others in the region, we did not do well. So I think that's one, part. So it's a mixed record, but I would say it tends towards failure more than success. The other big goal, as I said, was the structural transformation of the economy, right? How do you build a diversified industrial base? And actually, it's interesting that in the Nehru years, India didn't do too badly. Means today, if you see, as I said, the GDP grew at 4%, but industrial growth, as measured by the IIP, was growing at twice that. So India's average IIP growth in those 15 years was 8%, which is quite astonishing. If you see, like, IIP over the past 7-8 years in India, it's been 1%, 2%. So there actually was a big increase in industrialization in India. And not just industrialization, I think what the plan set out to do, that how do you deepen Indian industry? How do you strengthen your industrial base? So the production of machinery in the second plan years, I'm just saying 56 to 1961, grew at 2.5 times. So it was the supply of machines in 1961 was 2.5 times the supply of machines in 1956. Steel production was twice. So the amount of steel produced in 1961 was twice the amount of steel produced in 1956. So if you look at the plan from its own prism of what should be done, what shouldn't be done, it wasn't a failure. That, even today, if you look at the index of economic complexity, which one of the American universities, Harvard, one of them does, it's very interesting that India has an economy which is far more diversified than is predicted by its per capita income. And, I still remember that 10, 12 years ago, I was on a flight to Karachi and I was reading a Pakistani paper and I was looking at the stock market listing, and I was struck by the fact that Pakistani stock market was at that point of time completely dominated still by textiles and, banks, etc. It's not a, while India at the same time we had software, we had pharmaceuticals, we had steel companies, we had auto companies, and of course, the financial sector. So I think that India's economic complexity or India's diversification did happen. The problem is that it happened at great cost to the economy, in the sense that it happened through a very inefficient public sector. It happened through a great, crowding out of other activities. So, just in conclusion, I think that, it's been those 40 years were very, very interesting years. There were some successes, there were more failures, but I don't think it's correct to completely dismiss, because I think, as I said again, we fall prey to grand narratives. And I just want to, because if you look at history, I think it's much more nuanced. And I mentioned Alexander Gerschenkron and in the beginning, right? And Alexander Gerschenkron, in his classic book on development history, says that every country has to be cognizant of its institutional quirks and angularities. What works in one country need not work in another country. And I've thought of it recently when I read a NBR paper on Milton Friedman. So Friedman was a very strong proponent of flexible exchange rates. But it's interesting that paper quotes Friedman at length on India as well. But Friedman makes a broad point in one of his articles or his speeches, I don't remember, where Friedman says that, see, I'm a very strong supporter of flexible exchange rates. I don't think governments or the central bank should fix exchange rates, but I'm saying this only for developed countries. I think that for developing countries, there's still a case for fixing the exchange rate. Now, I was quite struck, that someone like Friedman would say this. The point being that, it's easy to dismiss 30, 40 years of experience saying that, there were a bunch of idiots or something of that sort. It's not that. They were struggling with very unique challenges. I think the real problem was that the sheer, overconfidence in the ability of the government to plan at a very micro level was what led to the failure of Indian planning. Not the idea that the government has to do something in the early stages of development. So I'll stop here. It's been 1 hour, so perhaps I've run over time, so I'll happy to take questions for some time.
Thank you so much, Dr. Niranjan. So I'll just read out the questions that you've got till now. Okay, so the first thing is, there's a question from one of the audience members asking whether being an agro-based economy is really a bad thing for a growing economy as such. And there's another question which you might want to take together with it, which talks about whether there should have been a shift to focus on the agriculture sector, and more importance should have been given there while planning.
Yeah. So so let me begin with the overall thing that there's no doubt that the planners did not realize the importance of agriculture, right? So looking back, there was a case for more investment in agriculture, and I think really, you can't think of economic policy without thinking of the geopolitical, because these are all political activities as well. And really, I think it's only after the 60s when there were 2 droughts and basically India was completely dependent on US food aid that there was this great thing that we should become, we should have our own, independence in food supply. So I think that there was definitely a flaw in the planning process, that they underestimated the importance of agriculture. But I don't think that an agro-based economy is a solution, right? Because if you look at the development history across the world, you will see that gradually the number of people in agriculture starts falling. And I think that is, it can't be a long term. So agriculture per se should get more funds, perhaps, because if you need to secure your food supplies. But if you think that agriculture, just by being an agrarian economy, we are going to progress in the world, I highly doubt it. And it's interesting, again, since we're talking a little about history, in 1920, Dr. Ambedkar, he's known as a lawyer, but his 2 PhDs are actually in economics. He has 2 PhDs, one from Columbia and one from London School of Economics. And Dr. Ambedkar wrote a paper in 1920 on the agrarian problems of India, where he said that, paradoxical as it may seem, the solution to, the agrarian problem lies outside of agriculture. So basically what he was hinting at is that we need opportunities for people to move out of agriculture. Yeah, so in short, yes, there needed to be more focus on agriculture, but as a long-term strategy, India needs to industrialize. I don't see any other alternative.
Thank you so much. You mentioned there were also social concerns as such. So there's a question on that line, whether the central planning in India was actually an economic experiment or decision, or was it more of a political social decision, given India's relationship with other countries at the moment?
Yeah, so see, there are 2 or 3 things here. One is that this planning bug had bitten every country. Means if you look at Europe also, as I said, lots of European countries had planning mechanisms. In fact, it's interesting that Macron has again said that he wants to revive the old indicative planning of France. They called it Le Plan or something like that. But obviously, planning was in the air, and Nehru was taken in by, and so also Bose, by the way, was completely taken in by the Soviet success. So success, or what seemed like a success, obviously. So I think that there was a geopolitical angle, absolutely. The influence of the Soviet Union on the Indian leadership was not insignificant. So I think the 30s, 40s, 50s, a lot of people looked at the Soviet Union as some sort of a success story. So I think, yeah, I agree with you that there was, it's not just an exercise in economics, it's an exercise in politics and geopolitics as well.
Thank you so much. There are two other questions which I'll quickly try to sum up together. So it's about whether during 1950s, when we were actually planning, there was any country by then which had already attempted to plan and failed, which could have acted as an example or a hint to the planners saying that this does not work.
Yeah.
And secondly, is there any country to till date which has attempted planning to a limited sense and succeeded?
Okay, so the first, I think if you look at, again, the history of Asia, to see planning, there are various types of planning, right? So industrial policy in a way can be called planning. Very comprehensive Soviet-style planning can be called planning. But generally, let's use it loosely as heavy state intervention in the industry. I think the real change happened in the 60s, and in the 50s, as I said, Indian planners, other than that 57 balance of payments crisis and sort of rise in inflation, they should have been fairly, confident that they have done a good job. By the 60s, I think if you look at across Asia, South Korea, and even South Korea did have a plan, but it was a much different type of plan. So by then they start changing their economic strategies. So it's not so much the 50s. I think the real mistakes happened after 65, and after 66, after Mrs. Gandhi came in, and she realized her own mistakes. By 1980, she had changed again. So I think it was in the 60s that India really lost an opportunity to, change economic course. And I think Suresh Tendulkar in one of his books makes an interesting point. He says that in 69, India had a choice between economic reform and radical politics, and I think Mrs. Gandhi chose radical politics by swinging to the left. So it's not so much 50s, but I think 60s and 70s. See, the second question was, has there been a failure or a success? I'm sorry.
The second part was, has any country been a success, even if it limited central planning?
Yeah, so see, this is the big debate, right? I think that if you take comprehensive planning, then it's my view that no country has comprehensively planned its way to success. But if you say that have limited forms of state intervention worked, they have worked, So if you look at, as I say, I mentioned Korea, Japan had this MITI where Ministry of whatever, so which basically worked very closely with the private sector. So if you look at it, it's a mixed record. So in industrial policy, let's not call it planning, Latin America was a massive failure. East Asia was a success. Why was East Asia a success? Latin American a failure? That's, I think, a thing for an entire different session. But my guess, just a limited point right now, is that a lot depends on openness to trade. I think what the Koreans did well, the Koreans also did try to provide subsidies to certain industries. So the 62 plan, which the Korea 63, whenever, when Park, who I forget the entire name, he took power. It was very clearly a plan to, build shipbuilding, steel, chemicals, and something, 4 industries, right? And the Korean government provided subsidies, etc. I think what really Korea managed to do, one of the reasons is that they still, because they kept themselves open to international trade, everything, all these national champions were disciplined by the international market, So you still had to be able to compete on price. I think that is a failure of most other countries. But it's a very, very complicated thing. This is a meta debate in economics, that has industrial policy worked or failed.
Yeah, thank you so much. You stated about the importance of trade as such. So there's a question that whether was one of the major reasons why Indians back then, the liberals back then avoided trade because of the fear of exploitation again, because of our experience with the British? Or was there any other reason why the political masses then decided not to open up for trade?
So obviously this, idea that the British came as traders and then we lost political independence is sort of deep-rooted, not just in the political system, but across India, right? So it's a very, very strongly held belief. So it's hard to believe that that did not play on their minds. But I think they also had a more practical view of these things. So India at that point of time was largely a producer of commodities, right? It was rich in commodities. And after after World War II ended, and then there was a Korean War in 50 and 51. So there was a major demand for commodities across the world, and that actually was the fillip to the Japanese economy, which actually brought Japan back into the game. But most of the then after the after Korean War got over, commodity prices collapsed globally. So I think there was this overarching fear in not just in India, but even in Latin America. So whoever studied economics would know that there's this famous Prebisch-Singer hypothesis, Raoul Prebisch and Hans Singer, that export markets are not the way to go for developing countries. The terms of trade will always be against you. So it's better to build your domestic capability. So there was definitely also this export pessimism. And as I keep saying, I think, I'm open to debate on planning, on even the role of the public sector perhaps. But I think the real big error India has made in history, in its post-independence history, is being close to global trade. So again, to just give a short answer, the history must have played a role, but I think even the situation in the 50s was such that a lot of countries believe in export pessimism.
Thank you so much. So there are a couple of questions which now takes us to the future. Such, given the dynamic and digitally enabled market forces today, as they're more than ever before, would it be sensible to have an annual or 5-year planning exercise now? And there's an additional question I'd like you to ponder on, Doctor. It's about considering the negative impacts of the pandemic and all. Would planning for the next decade make sense?
See, again, it goes back to this question, which is what is planning? So, I tend to be skeptical about the ability of any centralized agency to plan or to sort of think about the future better than risk-taking companies. So I think there is, I don't think, I'm not a big fan of this idea that India needs 5-year plans. In fact, with digital technology, all the more so that if things are moving so fast, means products become, outdated within 2 years. It's very, so just, just to stay with that idea that, suppose I say that I'm going to build I'm a planner, right? And in 2010, I say I'm going to build a factory or I'm going to help build a factory for creating 10 million mobile phones. And then I say that, I'll give subsidies, I will tax them less, whatever, I'll protect them. And then so it's an old mobile phone, right? And then the smartphone revolution happened. Now, what do you do with that factory? Similarly, today, suppose you make a big bet on electric vehicles and say that the Indian government will ensure that, if you're producing electric vehicles, we will support you, etc. We don't know, na? 10 years later, the technology may move somewhere completely elsewhere. So, in fact, the more technologically dynamic an economy, the less is the case for, centralized direction of resources. After pandemic also, see, you know, again, I want to distinguish between industrial policy uh, and planning. Because planning actually is much more intensive. You say that this sector needs so much capacity. So I am overall skeptical about this idea that and this again I think I'm not a Hayekian by any stretch of imagination, but I think Hayek's central point, which is that in a complex economy, knowledge and skills are so distributed that it's very difficult for any central agency or even a very high-end computer to calculate, do the economic calculations needed to decide on investment plans or consumption plans. So, be it technology, be it the post-pandemic world, I'm skeptical of comprehensive planning for sure.
Thank you, sir. So just to reiterate, Dr. Niranjan, so is it that planning as a concept failed when we attempted, or is it because we tried to plan too big and go too far?
I would tend to agree with the first, that planning as a concept failed.
Fair enough. Thank you so much, Doctor. Like, I have a couple of quick last question. One of them going straight to why do you think the Swatantra Party was unable to gather its popular support for its ideas?
Oh God, that's a tough one. This is just pure speculation. I'm not a expert on by any stretch of imagination, but I think it lacked the social base. Means today there is in fact India has a large middle class, mobile middle class, a large stock of private capital. Maybe it was ahead of its times because at that point of time it didn't have. Of course, there were parts of the peasantry which supported it. Then there were parts of the urban middle class which are very small. So I think, and also the overall, at that point of time, the Congress was such a diverse and strong political machine, and it had great strengths. There's a reason why people voted for the Congress of those days. It's not that I'm dismissing that. So I just feel that it was maybe 3-4 decades ahead of its time.
Just two final questions for you, Doctor. One of them being on what is the influence of John Kenneth Gilbert on Nehru and the economic policy?
Frankly, I don't think Gilbert was a very big influence. So, of course, he has written a lot about his days in India. He was later ambassador to India during the Kennedy administration. But before that, as I said, lots of the best international economists were invited by Mahalanobis to ISI and to the Planning Commission to participate. But in terms of the overall planning strategy, I really I'll be surprised, but I think Gilbert was a bit clear. There were others who had far bigger influence on, like, Nicholas Caldor had a big influence. Mikhail Kaleski had a big influence. I really don't think Gilbert was, although he may have had some inputs, but I would doubt that he had a big influence on our plans.
Sure. Thank you, Doctor. Last but not the least important question for you. Would you argue that even till now, even after the Planning Commission has been removed, we are still in certain sectors, still centrally planned in all but name? That it still exists?
No, I doubt it. There is government intervention still in many sectors. The agriculture thing right now just shows, But I don't think India is centrally planned in that sense. There is still a lot of regulation which holds back, which is popularly called the ease of doing business. There are tax laws, like we've had this entire thing of retrospective taxation. There are lots of reasons to complain about the policy framework, but I don't think India is centrally planned in that sense today.
Thank you so much, Dr. Ranjan. Any final closing comments from you before we go back to Asta?
No. Just thanks so much. It's a pleasure speaking here. And as I said, I'm an old sort of insider for CCS. I hope if you call me next time, you don't call me Dr. Rajadhyaksha, call me Niranjan.
Thank you so much, Niranjan. Asta, yes, back to you.
Thank you
Thank
so
you.
much, Dr. Niranjan.
Oh,
Yes,
sorry.
go ahead.
I just wanted to say this was a very, very insightful, and I learned a lot just listening to this entire lecture. Thank you so much for your time. It was a fabulous, fabulous end to the week this week.
Yeah,
Thanks.
actually the same. And I think personally also for somebody who's not been studying politics and everything, this was an amazing insight into how politics has been responded to central planning. Thank you so much for speaking at eBaithak.
Thank you so much.
My pleasure.
And thank you so much, participants, for asking so many questions and being there at the discussion. Anas has shared with you a feedback form in the chat box. We request you to please fill that up. The feedback is really important. We share it to the speaker also, and it's very important for us to structure the future eBaithaks.